next panel will be a pretty interesting one. They'll be discussing OTC crypto trading versus the traditional exchanges. Leading this panel is Stefano Virgilli, CEO at Vox and a startup and STO advisor. Stefano is also an avid traveler with a personal goal to visit 100 countries before 2025. And he is now halfway there with 52. That's not his age. So let's put our hands together and give a warm welcome to Stefano and our distinguished panelists, please.
Thank you, thank you, thank you. It's always exciting moderating a panel at the end of the at the end of the show, because you know that there's going to be enough people in the room. They motivate us to carry on, but at the same time, we are quite free to say whatever we want. Chances of being sued is half than the first day or during the morning. So the topic is quite interesting. Is OTC versus the traditional exchanges. And I will let the distinguished guests introduce themselves with your name, your company, what do you do, and to which of the two you belong. If you consider yourself more OTC, exchange, or a bit of both.
Sure, my name is Luke Wagman. I'm the Chief Evangelist of CoinMarketCap.com, the world's leading cryptocurrency information resource. I guess that would put me more on the side of the spot trading exchanges, but obviously we're thinking about tracking OTC data as well.
Hi, I'm Tintin, and I'm a co-founder of Amber AI. We're a principal market making and trading firm. We also manage a quant fund focused on crypto. So most of our activities are on the kind of exchanges that are out there.
Hello everyone, I'm Jasper, the managing director of eToro. So maybe some of you already know, like eToro is actually a social trading network that offering multiple asset class, including crypto. I think I will be more on like half-half, OTC and exchange. We'd love to share a lot more with the audience down there. Obviously, it's like the trading volume. The audience reduces the trading volume in OTC and exchange. But I'm happy to share a lot more.
Hi, my name is Justin CHOW. I'm the head of business development for Cumberland. We're one of the largest OTC trading desks in the world, so I'm definitely on that side. As a liquidity provider in the space, we also do trade on a bunch of exchanges, so I think I have a pretty strong understanding of both sides of the coin.
Hi, my name is George ZARYA. I'm the CEO of BeQuant. We operate a cryptocurrency exchange and prime brokerage based in London and Malta. And we tailor to institutional clients. Our core product is the exchange and liquidity. OTC is more of a value-added supporting product, but I can speak for both. Yeah.
Thank you for the introduction. Let's see also from our audience, how many of you are actually holding cryptocurrency? Can you put your hand up if you're holding cryptocurrencies? Can you keep your hand up if you're using exchanges? If you have used an exchange, let's say, over the past 1 month? How about OTC? Can you put your hand up if you're using OTC services? Right. Am I right to say it's the minority? Would that be agreeable? Yeah. So my impression difference between OTC and exchanges, having used both services, was at the beginning when I got into cryptocurrencies and I needed to make transactions, that was the only easy way to get into cryptocurrency with relatively large amount of money. But it was more probably of under the table than over the counter at that point in time. It was like the guy that you can pay cash and he gives you cryptocurrencies. Probably now is no longer the definition, I would say, right? Over-the-counter OTC people, would you like to correct me? Is OTC more institutional now, more formal?
Yeah, I'll take a stab at that. It's certainly very institutional. I think when I started at Cumberland just over a year ago, I'm an internal transfer from DRW, which is our parent company. DRW is a 26-year-old proprietary trading firm in the US with about 900 employees. 15 of whom are internal lawyers and compliance persons. So a very established behemoth of a trading firm, and we got involved in crypto 5 years ago, started trading under the Cumberland brand, then market making OTC. And so, it's very institutional in the sense that I think I come from the FX and interest rate world where we traded with, your Goldman Sachs or JP Morgan. And, how it works today when people come to ask us for prices is very similar. And so trading agreements are set up similar to when you, open an account with an online brokerage firm, for example. And then, you have multiple mediums of communication of which you can ask for pricing. And so that's kind of how my understanding of OTC markets work from the last 10 years in traditional finance as FX rates and credit, traded OTC traditional markets my entire life. And so when I moved into this space, I started hearing about these large deals and 200,000 Bitcoins and all that stuff. And that's the impression a lot of people have as to what OTC is like. My understanding is that a large majority, if not close to all of these, are probably not real, and that OTC trading should be fairly frictionless. At least certainly it is with us and with some of the other players in the space.
Thank you very much. Also, the topic for this BlockShow is maturity. Everyone is talking about maturity. On the poster outside, they talk about blockchain maturity. So it sounds like the STO became mature in a way, right? When it comes to exchanges, the question that I keep hearing on a daily basis on LinkedIn is an exchange asking me if I have any good project to list. I counted 26 exchanges contacted me over the past 5 weeks. Are there too many exchanges around?
I could take a stab at that. So about a couple months ago, from my perspective, just to give you guys a little bit of insight into the inner workings of CMC, there's been almost like a switch was flipped where suddenly we have a huge influx in the amount of exchange requests that we receive. So I think that if I can even begin to quantify the amount of exchanges that exist right now, I would probably, it's tough to quantify, but I'd probably put it about maybe a few thousand at least. And is this a bad thing? I'm not too sure. I don't think so. I think that to reach that magical reality of mainstream adoption, where we're no longer having to explain to our friends and family why we need to put time into understanding blockchain technology, you need to have many exchanges. You need to have them be accessible to many people. You need to have them be translated in many languages. So I don't think it's a bad thing, but it does add a layer of complexity to our work as we do evaluate each one with the same level of scrutiny when we evaluate listings to CMC.
I think I will follow up with what Luke just said. I think are we having too many exchanging right now? It really depends on demand and supply, right? So we cannot just say it's too many or too less. But obviously right now, the demand is less than the supply. So I would say upcoming, maybe we will be seeing a lot of merge or acquisition or smaller brokers is going to disappear upcoming. So I would say it's not less is better or more is better. It's more like how exchange come into the competitions, right? So in the last years, a lot of exchange come in with some new ideas, doing new stuff on the mining, on the marketing ideas. So I don't think this is some very healthy competition with exchange. I think upcoming will be less exchange, more healthy exchange, more regulator exchange.
Well, with the regulation coming into place, I mean, basically operating an exchange takes a massive resource, IT resource, compliance, legal, operations, you name it. I mean, you have to support hundreds of people essentially to maintain a proper exchange infrastructure. I mean, if you tell me that all these 10,000 exchanges have 100 people and staff, I'm going to laugh at it.
Yeah, probably
so
not.
obviously the place is maturing in this space, and there's going to be a consolidation one way or another. As the regulation kicks in, again, a lot of them will just cease to exist or will go into a absolutely gray area, which is not good for the generally for the market. But again, as far as the sort of a more traditional regulated markets concerned, I think the space is definitely going to get more civilized, professional, and mature.
Yeah, what was striking me about the exchanges is that, number one, exchanges are great at organizing after parties. That's probably a fact. Everywhere you go, there is an after party of 5 exchanges that night. The second thing that they are good at, it's supposed to be the exchanges, the primary goal. But then demand and supply for the exchanges, for as much as I see now, they are more interested in listing projects than getting customers. I remember when, like, until 1 year ago, they were, for an ICO, they would say things like, pick an exchange which is within the first 10. Now already say within the first 60 or the first 50 or the first 100, and it's still considered okay depending on the volume. So I guess the next question would be about volume. The volume on exchanges or the volume on OTC is my view that exchanges are so many with so many users that make small transactions while OTC are very few and they make large transactions. Does it make sense?
Yeah, so our minimum trade size for individuals or entities to trade with us is $100,000 per trade. We have, some of the biggest funds, miners, ICO guys that trade with us. Many people trade multiple times per day, and I think it's a different type of counterparty base that will go to an exchange. I think an exchange is a great venue for the first timer in the crypto industry who wants to dabble their feet in the space and see what it's like. But once you become an institutional player or you're an ultra high net worth or you're an OG that's sitting on a lot of coins, you can't really move that kind of volume on an exchange without significant market impact. And so the idea is you can go to an OTC principal trading desk like ours and you can ask us for a price in 2,000 Bitcoins and sell us 2,000 and we'll take the whole thing from you right away. The risk transfers directly onto our balance sheet and then it's up to our traders to be able to manage those positions and work in or out of them. They might want to keep it or they might decide, look, I don't want to be long this many, I'll reduce that risk, etc. But I think going back to your question, Stefano, and what you mentioned, it's actually related to the evolution of exchanges as well, the volume. And what we've seen recently in the institutionalization and maturity of the crypto industry is that there's a new breed of regulated exchanges now offering crypto liquidity, starting with the CME and the CBOE last December, followed by Backed and ErisX, two other exchanges more that are going to be launching early next year and to be regulated as well. And so now you have multiple venues of liquidity out there for people to be able to access the crypto market. And what that does is it provides institutional investors the ability to participate in this space, whereas they may not have been able to in the past because of the offering memorandum constraints that they have. I'll give you an example. Let's say there's a fund manager in the United States and his fund invests in currencies and commodities. He'll have a document called a PPM, Private Placing Memorandum, that his investors would read and they would invest in his fund as LPs. And that PPM may say that he's not allowed to invest in any unregulated assets. Currently, the cryptocurrency industry is not regulated, and if you were to trade on some exchanges that are unregulated, he would not be able to buy or sell these instruments. But he may be able to buy Bitcoin on the CME futures because that's a regulated exchange that he probably trades on already. You can trade the S&P futures there and many other products. And so with the introduction of new regulated exchanges, I think it could bring in a new set of market participants, and that's pretty exciting for me.
Thank you. Tiantian, your opinion?
Yeah, I mean, I think I echo a lot of what Justin said. I think the way I think about this space is actually everything that trades currently is actually, by definition, it is an OTC market. So like looking at what the definition of an OTC market is, it's a kind of, when stuff trades in a distributed kind of dealer network. So I think the current crypto landscape is very similar to how, say, spot FX or FX forwards trade. Unlike, let's say, what the other side would look like, let's say Apple stock, which is designated to only trade on a NYSE or kind of NASDAQ. Whereas in this space, every token you trade, they're fungible on all these different exchanges, which are really more web-based kind of trading platforms. So I guess it really goes back to kind of how do you define what an OTC market actually is. And I think in everyone's head, it is kind of, if you have a limit order book, that's an exchange. And if you're trading kind of, in a Skype chat, that's OTC. But looking at, let's say, the FX market, which is, I think, the largest OTC market in the world, trading is done through limit order book as well, but that is an OTC market by definition. Trades are done kind of via different trading venues and then settled bilaterally through processing.
How about the future? Everyone is talking about STO. I think was pretty much the theme for this BlockShow. Someone behind the scene told me everyone is just replacing the word ICO with STO, and now you went from dirty to clean or from old to new. Where does that stand in terms of exchanges and OTC for security tokens? There will be an invasion of security tokens coming up in the next 6 months to 9 months. Where will they find liquidity?
I would say that, in the beginning at least, while there aren't so many security token exchanges emerging, there's probably going to be quite a considerable amount of OTC. I think that, just like there are now, before, in the current markets, we have a lot of OTC trading going on before there's even secondary markets for a particular cryptocurrency, right? I think we're going to see this happen a lot with security tokens as well. I'm sure now there's a lot of OTC going on, right? So.
Well, if I could add, the general pattern of evolution in the markets is generally when something comes up, obviously it is more peer-to-peer, it's OTC based.
Yeah, of course.
Then as the market becomes more liquid, more transparent, the liquidity moves into the electronic markets. And then you have the invasion of more sort of AI, algo trading, and so on and so forth. That's what happened in the securities world, and 10 years ago. And it's very similar patterns happening in the crypto space as well. And again, STO is just going to be another sub-asset class, if we can call it that. And we'll follow similar patterns. Starts with OTC, moving to exchange.
I might hold a different view, though. I think, actually, for example, eToro is actually getting a license that actually allow us to list security token, right? So I think there's regulations coming on this. It's getting more mature. Eventually, there will be exchange that able to list security tokens that the mass audience actually can come into the exchange trade security tokens, and eventually, for example, from Cumberland, they will be adding a lot more tokens that allow the institutional players also to get into trade, OTC. So I might predict, that the sequence will be first to the exchange and then to the OTC.
Yeah, I was going to say that, TIANTIAN mentioned that in FX it's the largest OTC market in the world, and the majority of the volume is actually electronically traded. So you can trade with a bank on Bloomberg and say, hey, where's your price on 200 euros? Or you can go and you hit an electronic platform. It's possible for a market with the addition of prime brokers, et cetera, to still be an OTC market where it's settled through a central clearing party, but be majority electronic traded. So it doesn't have to be necessarily voice trading. So that's kind of a hybrid market you see in both the commodities and the FX world. Whereas in the equity world, it's majority traded on regulated exchanges. On the note of security exchanges, well, I think there was some really exciting news last week or actually yesterday about Harbor, the United States. Josh Stein and David Sachs, they just announced their security token exchange offering. The difference there would be, once you start touching these type of regulated instruments, you need to be licensed as well. So, it's a natural development to be able to put stuff like real estate on the blockchain. I think that's the first project they're doing in partnership with DRW. Yeah, it just, again, it's a natural progression of the use cases of crypto. I don't think it necessarily changes the way the secondary market behaves. It's just another kind of development in how the ecosystem has evolved.
The main difference, if we come to the definition of what OTC and exchange is, it's the low touch, high touch. This is the terminology in the securities world. The low touch means basically electronic, and that's what we basically consider exchange. High touch is when you pick up the phone or you type and you have a human contact. And yeah, in this case, that's the main difference. And again, the high touch business is more for bigger size, more complex, or less liquid assets. And as things become more efficient, they move into electronic low touch.
So when we talk about regulation, which I have heard talking about regulation pretty much at every conference over the past 1 year regularly, but when we talk about regulation, it's always about preventing things, preventing money laundering, preventing funding of terrorism, preventing scams. When it comes to OTC versus exchanges, where it's easier to implement, if someone had bad intention, where would that someone go? OTC or exchanges?
I would say there's no difference compared to OTC or exchange. It really depends on how the OTC firm and the exchange implement their KYC and AML procedures. Like, I think we should define, like, I think we've been trying to define the P2P to OTC, right? So if we're talking about the P2P, like right now I go to you and then, you know, I give you a bunch of money buying the crypto from you. Yes, maybe there are a lot of potential AML issue over there, right? But such as a company like Cumberland, I know they actually implement very strict, you know, AML procedures, right? So I think that would be the definition over there.
We actually have an in-house AML officer.
In terms of scams, does that affect either one side or another? If someone wants to pull scams, will probably hide themselves as an OTC. Will they do things like that? Or hacking, for instance, the security part, we would say probably exchanges, right?
I mean, I think like this just goes back to like how do you educate yourself on what is a scam, right? When you're evaluating the prospect of doing anything with your money, it's especially important to question, right? If something seems too good to be true, then definitely be really critical. Gather multiple perspectives. If you haven't done anything OTC before, maybe talk to a colleague, a friend who has, and really get a sense of like what you're doing before you put your trust in somebody who claims to have something or a good opportunity that might be too good to be true.
I mean, I think we've all seen and we discussed there's a number of sort of cowboys around the market that go around with these tens of thousands of, you know, Bitcoin blogs, and obviously this, you know, an OTC market has sometimes that sort of a flavor of large volumes going through. A lot of that is just plain fake. I mean, there's nothing happening. It's some sort of scams. But the exchange business is more transparent, but doesn't mean there's no tainted activity happening there, and that's why you see there's a lot of regulation happening around the exchange business. There's, you know, blockchain analysis. You can actually trace the source of, you know, a particular Bitcoin, which wallets it's coming from, and so on and so forth. So again, the technology allows us to really monitor these kind of activities very well, but it doesn't really, yeah.
And in terms of variety, I would say exchanges have thousands of currency. OTC is only for Bitcoin and the big boys, or there are more altcoin coming onto OTC?
Well, we trade about 30 to 35 different crypto assets right now. That's into about 10 different fiat currencies or crypto to crypto as well. So, you know, we can do Bitcoin dollar, Bitcoin euro, et cetera, or ETH BTC. I'm not sure the offering actually matters with regards to your question about illicit activity. I think in you know, traditional markets, even physical markets, commodity markets, you know, there are going to be bad actors, and they exist everywhere. It's really up to the industry professionals and the main participants in the market and the service providers to work together and want to be able to build a business that's sustainable for the future. You know, as Jasper mentioned, you know, the KYC and AML process that we have in place is so stringent because the size of our institution is at risk if we were not to do things properly. So I think ultimately, end of the day, you know, it's going to be the service providers that are the ones to be responsible for making sure that they are implementing the best practice, so that when this industry does become regulated, that they've been doing everything by book ever since the beginning.
In that idea of maturity that we were describing before, and the exchanges, some of them closing up, some of them being acquired, would you see more OTC taking over exchanges, or exchanges taking over OTCs?
I think they actually can coexist. Again, I like to draw an example from traditional markets, even in the equity space, which is a highly exchange-dominated industry. There are block traders that trade blocks of equities over the counter. In the ETF business as well, it's the same thing. An ETF is traded on exchange. It's a financial instrument. But there are block traders that trade ETFs OTC. And then on the other side of the spectrum, you have stuff like corporate credit, and then, of course, FX, which are highly OTC markets that are not traded on exchanges at all. And so I think the hybrid model, you know, can exist because, as mentioned, there's just different types of liquidity. On exchanges, as the liquidity grows, more and more institutional investors may be able to trade there as well. But there's still always going to be a need for someone with a balance sheet to be able to put out their hand and absorb a large position without it having to go directly on the screens.
If I may add, again, drawing example from the securities markets, there are actually exchanges that operate in blocks in the securities world. So that's basically the marketplace for institutional wholesale traders. So, I mean, we could expect something like similar size happening, and there are a number of exchanges that trade in the significantly larger sizes than your traditional retail-oriented crypto exchanges. So we're already seeing that, and I think as liquidity and as the regulation comes into force, there's going to be a pressure on the OTC market. Again, I'm not talking about established players. I'm talking about just the smaller OTC desks to come and become more transparent and put more flow through the exchange.
So I think we actually, you did a vote, right, just now at the very beginning, that actually show, like a lot of retail clients, like let me take FX as example again, right? So a lot of retail clients, they actually go to exchange because they are not going to trade a very big size, right? So that's why the exchange exists. But for the institutional players, they actually prefer to go to OTC to trade maybe a bit higher volume. So I think upcoming is going to be the same, like just FX industry. We have retail players, retail brokers, like Justin come from the institutional backgrounds. There's some institutional players would prefer to go to the OTC to trade big a lot. Also, what George just mentioned is like the light touch and the heavy touch, right? So I think it's going to coexist for sure.
We are left with less than 5 minutes. I'd like to ask you one last question, and each of you to comment. With regards to yourself, your perception of what's going to happen in the future in the market, what is your company doing and planning to do for the future? What are the next stages that your company is implementing? And any other remarks that you want to make? Just keep it at about 30 seconds, 45 seconds per person.
Sure. So August 1st, CoinMarketCap released our enterprise-grade API. And so the focus for us is continuing to expand upon its offering. Also, Q1, Q2, we're going to be releasing some pretty cool new products that I can't really release right now, but it involves occupying some of the more obvious utilities in the space that people leave CMC to go use. Beyond that, we have a blog and newsletter, which is an initiative to increase our community engagement, and releasing some new updates to the site that are going to give users more control of their experience, different ways to filter and slice up the data that's most relevant to them.
Thank you.
So, I mean, our business model is quite straightforward. So we voluntarily put up bids and offers on various kind of spot and derivative exchanges around the world with the goal of trying to earn the bid offer. So we always seek kind of new venues to trade on, different products to trade on. So I think that's not going to change going forward. I think one thing we're most excited about is seeing kind of the infrastructure layer of the space kind of continue to grow. Like looking at kind of how things trade in this space, it's still very different from traditional markets where you can kind of break down the trade cycle into three parts. So pre-trade, which is KYC and AML, the actual trade execution itself or the order matching, and then the post-trade, which is custody, clearing, and settlement. So custody is a pretty well-covered topic. I think there's not enough talk about the clearing and settlement layer. Right now, if you look across most exchanges, they are not only the order matching engine, they're also your prime broker, your custodian, etc. And so I think we're going to see that kind of change over the next year or so, where there will probably be an equivalent of a DTCC, CLS, or Euroclear come out, and that will reduce kind of the perceived credit risk at least, and kind of lower, I think, the barrier to entry for institutions as it kind of becomes more similar to traditional markets.
Thank you.
So I think eToro come in a very different backgrounds compared to other exchange, right? So we've been authoring multiple asset class as a stock, FX, and ETF, and we add crypto, a couple of years ago, and we are adding a lot more products. So I would expect eToro is going to adding a lot more tokens upcoming, maybe in a different authoring. So what we have done regarding the crypto side is we just launched our wallet. So it's going to be open up to the Asian market very soon as well. We just got the license in Gibraltar, the DLT license. I think we are definitely looking into the security tokens listing. there will be a couple of things that we will be working on very hard for the next year.
Thank you.
It's a loaded question, Stefano. I think, for the size of the institution that we are, first and foremost, we look at the three major risks in running this type of business. There's the market risk, which is taking positions in the market, and we're very comfortable doing so. As mentioned, a lot of the guys on our team come from professional money management backgrounds, such as myself. The second one is regulatory risk, and then there's operational risk. As TIANTIAN mentioned, the operational risk is kind of in the structure of how you actually conduct your trading, et cetera, and your settlement with your counterparties. The regulatory risk component is the area where we absolutely have to minimize that for a business of our size. And so we continue to make sure we operate in a manner that's going to be compliant in multiple jurisdictions, continue building out new potential business lines and solutions for counterparties that want to access high quality liquidity with professional providers like ourselves. And so there's so many different things we're working on, but I think that's kind of making sure that we are building something that's sustainable for the future. As we look at the next 10 years in this industry, I'm not that interested in some of the activities that might yield quick money. That's not really what we're interested in right now.
Thank you. George, last.
Yes. For BeQuant, well, the nearest future is basically it's about prime brokerage and building out the sort of traditional securities business model, applying it to the crypto world. Again, the difficulty right now with many institutional clients is they have to go and set up into every exchange, have custody, manage the liquidity between different locations. So basically what we're trying to do is to take care of this hassle for clients, manage their operational instructions, hold the custody, and give access to the maximum amount of liquidity on the market.
Perfect. Thank you very much. Please join me in giving a big round of applause to the panelists. They will be around probably for further questions. For now, thank you for answering all the questions, and thank you to the audience.
Grazie mille, Stefano. Round of applause,
Prego.
please. Another round of applause for our panelists. They've been brilliant. Thank you.